Hello, my name is Neel and I welcome you all to yet another episode of Around the World in 7 days. From tea stalls along the streets to million-dollar offices, inflation has been a hot topic of discussion around the world these days. The vicious trap of inflation has gripped many parts of the world, including America and Europe. India has also not remained untouched by this. To overcome the inflationary pressure, the central banks of these countries are making various efforts at their respective levels. The most important task for them here is to increase the interest rates, thereby reducing the liquidity in the market. In this case, the Reserve Bank of India has increased the domestic interest rates for 6 consecutive times in the financial year 2022-2023. At the same time, Federal Reserve Bank of United States is also engaged in aggressively increasing the interest rates there. The seriousness of the situation can be gauged from the fact that the Fed has raised the interest rates 10 times in the last 14 months. As a result, interest rates in the US have reached their highest levels in 16 years. One thing to note here is that if the Central Bank of India, that is Reserve Bank, changes its interest rates, its effect is very limited, largely limited to the country. But when America does a similar thing, it has a global impact. These fluctuations in the interest rates by the Fed sometimes results in a bumpy ride for the world markets. But this time, America itself has been a victim of this catastrophe. The big financial institutions in America are in trouble. Last month, the world was left in shock by the news of sinking of America's two of the biggest banks, that is Silicon Valley Bank and Signature Bank. Along with them, America's First Republic Bank also collapsed. After this, the news of banking crisis came from Europe as well. Here, Credit Suisse, a major bank in Switzerland, collapsed. This news was hard to believe as Swiss banking is considered the hallmark of financial soundness. It came as a surprise for many countries outside Europe as well. However, in the ruins were a series of scandals, a change in management, and significant losses. Apart from this, other banks of the world were also under stress. Long story short, the global banking sector is in a state of turmoil right now. Its tremors are being felt from America to Europe. Because of this, there is increasing concern about its effect in other countries, including India. The question is, what is the real story behind the sinking of these big banks? What was the impact of interest rate hikes by the Federal Reserve? Were these banks too big to fail? Whether the global banking sector really in a state of crisis? Let's try to find answers to all of these questions. The trouble for US banks started after the Fed raised interest rates by 450 basis points. The change in interest rates caused a turmoil in the US bond market. The victim of this turmoil was the Silicon Valley Bank. It is a major lender to Silicon Valley startups, but these startup companies raised huge funding at their own level in the year 2021. Then all this money was deposited with Silicon Valley Bank, which increased the bank's deposit base by about $90 billion. Silicon Bank's customer base is focused on California tech startups, and these startups were already flushed with cash. Because of this, they did not require loans. As such, the bank invested a major portion of its assets, that is about 55%, in fixed income long-term bonds. The amount of investment was about $91 billion. These included bonds issued by the US government and mortgage-backed bonds. Out of this, about $80 billion was invested only in the mortgage-backed bonds. However, as interest rates in the US rose, these bonds became less attractive. In technical language, it is called yield curve inversion. According to statistics, in March 2023, the yield on 1-year US government securities had reached a 17-year high of 5.25%. What happens is that as the yield on a security increases, its price decreases. This reduced the capital base of Silicon Valley Bank. Although it was only a virtual loss, that is, unrealized loss, in reality, there was still no loss to the bank. But when the startups could not get the loans they wanted from the market, they started withdrawing their deposits from the Silicon Valley Bank. Alarms rang when in just 3 quarters, about $20 billion were withdrawn from the bank. Consequent to this, the bank was nearing a cash shortage. To avoid a default, the bank started selling the bonds that it held at a loss. According to a disclosure made on March 8, 2023, Silicon Valley had sold bonds worth about $21 billion at a loss. This created a panic in the market and the shares of the bank collapsed, registering a mighty fall about 60% in just one day. Something similar happened with the First Republic Bank as well. This bank was also severely affected by the hike in interest rates. It is nothing less than dramatic that the banks like Credit Suisse in Europe, along with 3 big American banks, suddenly lost credit. Hence, the question arises whether the global banking sector is in trouble. This is the biggest bank crisis in America since the financial meltdown of 2008. The collapse of these banks has completely shaken the money changers, including the investors. However, many investors are still not ready to identify this situation as a global banking crisis. They believe that the problems which affected the entire banking system in 2008 are not there today. The situation at that time was such that banks all over the world suddenly came to know about the crisis, and due to this, the investments made in the American real estate market were ruined. To overcome that crisis, the US government had to resort to a big bailout. In this way, the problems in America at that time led to a full-blown financial crisis in the world. Since then, to avoid any such scenario, rules were made to keep banks more liquid. That's why most experts believed that these recent issues will not have much impact on the world economies. Despite this, the banking sector is very complicated. It is difficult to ascertain what other weaknesses are there in this system. It is difficult to predict with precision what will be the global economic situation in the coming times. However, the current interest rates and the investor confidence remain volatile. Moreover, panic about the financial health of banks is often like an epidemic. And in such a situation, if the customers worry about their deposits and start withdrawing their money from the bank, then it can prove to be fatal for any bank. Well, right now, the current situation can play a defining role in slowing down of the world economy. Well, that was all in today's discussion. See you in the next episode. But before we leave, let's note down the practice question based on today's coverage. Explain the current US banking crisis. Also mention its effects on the global economy.